And welcome to a VSA Capital video blog. And delighted today to have Chris Evans, the CEO of Winsome Resources. So good morning, Chris.
Morning, Andrew. It's a pleasure to be here.
Now, you're obviously down in Australia at the moment, where obviously your project is in Canada, because you've just done a fundraise. And so I think probably the best thing is to start off telling everyone the reasons for the fundraise and where it gets you to in Canada, and then we can take it from there to a certain extent.
Exactly right. I think it's a great place to start because there's been a few questions from shareholders about our recent fundraise. And to go back a step, many of your listeners will remember that we have, of course, our Adenia lithium project, which is the fifth largest hard rock lithium resource in North America, just under 80 million tonnes. But 60 kilometres south of that, we have the Renard diamond mine, which went into administration about 12 months ago, and we secured an exclusive right or option to purchase it. Now, the option to purchase it came up at the end of February, so in a couple of weeks' time. In the meantime, since securing that option, we put out a PEA, and we've been running a bit of a strategic process. We've done about a dozen site visits and taken some very well-known names to site to start, because we feel that by the time we take on the Renard diamond mine, there's $1 billion in facilities there. There's a load of extra staff. We really changed the risk profile of the company. And so we really wanted to have a strategic partner on board by the time we did that. Now, some of the parties we've taken to site don't move particularly quickly, and of course they have their own timetable. We were hoping to secure one by February. That didn't happen. So instead of having that time pressure of having to exercise the option now, we spoke to the current owners, who are Stornoway, 50% of which is the Quebec government, through a couple of its institutions. We spoke to them about extending the option by a further 6 months. And so they were very supportive of us, and they love the idea of us taking this piece of important infrastructure and turning it into a critical minerals project. So they've allowed us to extend the option by 6 months, but we're paying for the care and maintenance costs during that time, which is 8.5 million Canadian dollars. So that's exactly why we did the fundraise, to secure that 6-month extension. It gives us time to close in on a strategic partner, secure a strategic partner, I should say, and it gives us a lot more optionality and bargaining power in relation to that particular process.
And look, it's quite tough times at the moment in the lithium junior space, shall we say. How did you find the fundraise went? I mean, obviously you've been successful, so I mean, at the end of the day, that's good news. But did people get it? Did they, were they happy? I mean, obviously there was a bit of a discount there, but I mean that's unfortunately pretty usual at the moment in this space. So just talk us through how it sort of went.
Yes, we had a 15% discount, which is perhaps not ideal, and it wasn't the easiest raise we've done. It's certainly different to some of those we did, like $50 million raise we did 18, 20 months ago, when money was being thrown at us and we were turning people away and scaling back investors. On this one, we were well supported by existing shareholders, which was encouraging, who know the story, recognise the quality of the assets. But we're doing a share purchase plan on top of it as well, to allow existing shareholders to acquire or subscribe for shares under the same conditions as those sort of funds and institutional holders that largely supported the raise had. So the paperwork for that will come out in a day or two, should be by the end of this week, and that'll be open for a few weeks to allow existing shareholders to participate. So it wasn't the easiest raise, but I think it's a testament to the quality of our story, that we're able to raise the money even in this market.
Obviously, there's quite a lot going on, with Trump now and the way he's behaving. China is actually, I think, just imposing, restrictions on process capabilities coming out of China. And here you are sitting, as you say, with one of the largest projects, certainly should we call it, in North America, which could be really key. I mean, in many ways, although the lithium market is still proving to be very tough, you are in quite a nice position, really, in terms of the geopolitical story evolving at the moment, aren't you?
I think we are. Yeah, I mean, it's hard to know what Trump's actions will have on Canada, on critical minerals, or on Australia for that matter. But I don't think there's many negatives in there for us. Critical minerals are still going to be very important, and despite what Trump may say about electric vehicles or his views on electric vehicles, building at an incredible rate energy storage systems, batteries for static storage, which are, in terms of growth rates, are catching up to EVs. That they're very important in the North American context. But then we also have Canada become very protectionist within itself due to the threat that the US potentially offers with these sanctions and the risk to trade. So there's almost one way or another, I think it's going to benefit us. There's may well be a Conservative government coming in to Canada soon when after the next election calls and Trudeau steps aside. Again, we don't think that'll have any negative effects towards us either. So we haven't really felt anything yet, but we don't think there's anything negative to it. And as you say, there's definitely a ex-China sentiment in the Western world, and we can only benefit from that.
Yeah, and look, at the end of the day, the really big, high-quality projects tends to be the ones that are successful, and you sit nicely in that category. So, should we say the odds are in your favour, you would think. Now, obviously, next week, for anybody listening to this the day we record, so to speak, is the big PDAC in Toronto. Everybody going down there. Well, firstly, will you be there, Chris? But I mean, what is the sort of key message you would, if you had to sort of sum it up in a quick sentence, that you would be giving to all the people that come along to PDAC to hear about this amazing Canadian project?
Well, it's not only for us, it's not only the size, because we're not the largest project in terms of resource out there, but for us, it's the work, the money we've got in the bank has allowed us to continue to work on our project so that when the lithium market does turn, we are going to be ready to ride that next wave. And the reason we're going to benefit a lot from it is because of the low risk nature of our project, I should say. Low capex and a lower risk associated with permitting because of the existing infrastructure we already have in place. So I think it's a nice, easy, simple story with a multi-decade life with more to go. We've got loads more drilling we could be doing. But it's a nice low-risk project, the capex of only $260 million US. But in addition to that, and PDAC is actually the week after next. Oh, sorry, Andrew, go on.
No. Sorry, I interrupt you. You carry on, Chris.
PDAC is the week after next, but next week I am in Canada for various business in Montreal and Ottawa, because in Ottawa there's a carbon removal day in a week's time, a week Thursday. And that's really interesting for us because the Renard mine has got a unique set of circumstances whereby the existing crushed kimberlite that was produced as a result of the diamond processing is very high in magnesium oxide, which is perfect for entraining carbon dioxide. And given the infrastructure we already have there and the fact that there's no other mining going on at the moment, we have the ability to use this infrastructure purely in the next couple of years until we get our approvals, purely towards carbon capture if we can. It's a really unique circumstance, and we've got an opportunity to turn Renard into a carbon dioxide removal hub. And it just so happens there's this carbon removal day, and we've found ourselves, we're attending, and we're very popular there. All these companies who have various pieces of technology to facilitate carbon dioxide removal, and then also the ability to set up financial structures to capture it and then sell it, are all going to be there. So we've got 2 days of that in Ottawa just before PDAC. And it's a really complementary, nice story to go with our lithium because we're not pivoting somewhere else. We're using the existing infrastructure, and we think it's got real ability to reduce care and maintenance costs in the short term over the next few years, and also actually bring in some income and lower our carbon footprint for the future.
I'll be fascinated to hear how that goes. That sounds amazing. And I apologise for getting PDAC slightly wrong. I'm actually flying myself next week, but I get there a few days early. So.
Yes.
Look, I mean, just maybe to sort of wrap up a little bit, you've been in the lithium game for a long, long time. I mean, these probably are the hardest markets ever right now for raising money for junior lithium exploration, which is why actually what you've done and where you're positioning yourself is so... well done you, so to speak. You've touched base the fact that you're talking to strategics, and these presumably are what I describe as big global players who see a long life of mine. Can you just again on those two, just how tough is it? And these strategics, just give us a bit of, you obviously can't name them, but a bit of a feel of the sort of people that they might be.
They are big international names, as you allude to, Andrew, and they. The good thing about dealing with them is they're not thinking short term. They're not thinking of the lithium price today being only $850 a tonne. To some extent, they're a bit ambivalent about the price, provided it doesn't go crazy, because they just need the supply in 3, 4, 5, 10, 15 years. And so we're able to have very sensible conversations with them about realistic valuations, and they want a long-term relationship, which is encouraging, and the short-term doldrums that we're in don't really affect them. I suppose the only thing it flows on to is that they're not in any particular hurry, because if they don't strike a deal this month, they can do it in 2 months, and it's not really going to affect what they're looking for. They're looking for a real long-term relationship. So that's perhaps the only challenge we've had, and that's great that we've got this extension to our option for another 6 months. But they're the sort of groups that fall all throughout the battery materials supply chain.
I mean, there was a sort of if you turn the clock back 5 years, everyone was sort of in a hurry to secure lithium. Then it all sort of petered out a little bit. It feels a little bit now as though we are starting to move back in towards that, not the hurry part, but people are realising actually we've been going a bit too slow. The transitional energy revolution actually is now starting to take off a little bit. And that actually there could be a bit of a speed up in the terms of these big players realising, no, we've got to commit to going EV or whatever else. Would that be fair? In the last few months, it does feel as there's been a bit of a pickup.
There's certainly been a lot of M&A, quite a bit of M&A activity in the market, which probably signals we're at a bit of a low, and it's about to turn, I would suggest. If you look at the compound annual growth rate for lithium, it's still estimated by both Benchmark and Fast Markets to be something like 13-14% per annum, which is way above any other commodity. It's not as high as the 19-ish percent they were predicting a few years ago, but EV rates continue to climb. And yeah, I think that everyone senses we're at the bottom. It's just, is the recovery tomorrow? Is it 1 month? Is it 3 months or 6 months? I think that's the feeling. And so I feel there's a whole lot of capital ready to deploy, sitting on the edge, but no one wants to be the first one in. But there's this M&A starting to happen, and yeah, I think you're right. Momentum's building.
Well, on that note, Chris, well done on your capital raise. Good luck with your strategic. Good luck in Ottawa. I want to hear more about that. Sounds fascinating, and I'm sure we'll be catching up soon.
Absolutely. I look forward to catching up at PDAC, and I'll fill you in on the carbon removal day. Thanks very much for the interview.